we have our keynote speaker up next, who's going to be talking to us about the fight to safety. Sorry to have kept you waiting. Thanks for your patience. But the fight to safety and why a crypto bank is more secure than a blockchain, it will be given by Joaquim Pedro Antunes. It is easier. JP, the stage is yours.
So I want to say that if you see me sweating profusely or even faint, it's not the food here, it's just I'm really nervous. But I'm going to try my best to do this presentation. And I also want to apologize for the clickbaity title. It's not that the crypto bank is safer than a blockchain, but it is safer than a crypto exchange or blockchain native startups. And that's what I meant, okay? So we're all familiar with the current economic climate. There's inflation, there's controls on capitals, there are wars, banks are failing us, and investors are looking for ways to protect their wealth. Bitcoin was born out of the need that some crypto anarchists saw for a digital native sound money. That's what it is for, and you may have invested in it, otherwise you wouldn't be here. So let's talk about how you can protect your assets into 2023. We are seeing regulation taking hold of crypto markets, largely still because there are too many FTXs around, and regulators are trying their best to put their cold grip on the market and keep us safe. That has consequences. You will see quite a few crypto companies fail because they can't meet regulatory needs. However, if you have invested in Bitcoin or Ether, those investments are probably doing better than anything else that you have invested, and you need to protect it, right? Let's see what our options are. So obviously self-custody was the first option. Your keys, your coins, of course, and that is true, but only until the moment that you need to use those coins. Once you press send, you are still relying on a third party to actually honor your trade and process it correctly. Crypto exchanges, on the other hand, are more popular. Most people buy cryptos at exchanges and keep their coins there. Here you are obviously trading the privacy and security for convenience. You are submitting all of your KYC data to a company that you don't know much about, that you can't see their financial statements, you don't know their corporate structure, you don't know much about their what their regulatory needs or obligations are. You just have to trust that they will protect you and your interests. Finally, we have seen also recently, because investors are afraid of keeping their funds at exchanges, they are withdrawing funds from exchanges and converting it back to fiat. But most banks don't really support crypto. So once you put your money back at the traditional bank, you might find yourself in a situation where you can't put it back to an exchange. So we have all heard stories of banks that have closed accounts of crypto investors or that have blocked transactions, so funding of crypto exchange accounts. This is where Xapo Bank comes in, and that's why I'm really happy to be here, despite my nerves, to tell you why we are different. So Xapo Bank is actually a crypto native company. We started in 2013 as a custodial wallet for Bitcoin. We've recently become a bank, and we're regulated by the Gibraltar Financial Services Commission. Apologies. We also have a VASP license. We offer a dollar bank account and a Bitcoin wallet together in the same place. And we will continue to grow our wealth management offering by offering services that will allow our members to buy and sell other cryptocurrencies, although that's still something to come. You may have heard of us because recently, just 2 weeks ago, we became the first bank to launch Lightning Network payment support. And we did so not because we're looking for the volumes that the Lightning Network currently still doesn't have, but because we want to remind people that we are a crypto native company and we support crypto projects. I'm going to say a few things about crypto exchanges, but I first want to tell you that I don't see crypto exchanges as being bad actors in general, and I don't see them as being competitors to Xapo. At one point, I was actually CTO of the 23rd largest crypto exchange by volume, so that's why I have a particular view on them and what they can offer. And what I'm going to try and do here is just talk to you about incentives. So blockchain works on incentives, and so do businesses. Let's talk about how banks make money. Banks make money because their customers deposit money with them, and they can use that money in capital markets to generate yield. Banks make also money out of the interest on loans, and of course there's also some wealth management fees, there's transaction fees, card fees, foreign exchange fees, etc. But mostly, for the most part, it's the financial well-being of a bank customer that makes a bank successful. A crypto exchange works on fees. So you pay for transacting, depositing, withdrawing, you pay for the custody. Any crypto exchange that lists coins will probably accept money from those projects to list or even launch those projects. And for the most part, a good customer is one that transacts often. Whether or not they're profitable, that's pretty irrelevant. The money is on the fee of the transaction. That makes a huge difference on the type of services that we offer and the type of behaviors that we try to encourage on our platform. So on our bank account, on our dollar bank account, we can give 4.1% yearly interest paid daily. And we do so because we have the transparency and the regulatory compliance needs to invest on the same capital markets that are able to generate those yields transparently. We also offer 1% on our to our customers' Bitcoin deposits and Bitcoin trading 24/7, of course. And we will never block you from accessing your own funds, and we will not look down upon our customers if they decide to move money away from us to a crypto exchange because they want to buy other tokens that we won't list. But accept that it's the investor's responsibility to choose where they put their money. Having a banking license also means that we have a deposit guarantee scheme. So deposits up to $100,000 are protected by law and can be, customers can be safe that that money will be returned should there be a problem with us. Also, because we have a VASP license, we are obliged to keep our customers' coins segregated from our own. That means that we can't invest or just exchange our customers' coins for the token of the day for a quick profit. They are fully owned by the customers themselves. And we use our balance sheet to protect those deposits. So should the problem occur that a customer loses funds with us, we will give back their Bitcoin based on our own balance sheet. Those are legal obligations coming from our licenses, and our regulator makes sure that we are transparent in the way we operate and the services that we can offer. So at Xapo Bank, we saw a need in the market. We saw that there are crypto investors around the world that deserve to have their wealth protected, that deserve the type of services that the bank can offer, the regulatory certainty of a jurisdiction such as Gibraltar, the access to a fiat currency that is as stable as they get, the dollar, and also Bitcoin, which is at the core of our business proposition. That's what we offer, and we will grow it, our offering somehow, but that's still, at the end of the day, the two products that will be our main offering. We believe that with those and our focus on security, we can protect your life savings and help you grow them. I would say that this is the end of my presentation. It was much faster than I anticipated, but that's it. Thank you.
Any questions for JP? All right, there's one question right there.
How's JP?
Cheers.
Very cool stuff that you guys are doing at Xapo. I just wanted to find out, so your traditional banking services that you have for USD, the transactions and tracking of those transfers, is that also on a blockchain ledger, or is that traditional banking ledger?
That's a traditional banking ledger. So obviously, as a fiduciary, our board of directors has an obligation to know exactly what happens with every single transaction, and we use market standard software products to do that.
And have you considered using some sort of blockchain technology to do that tracking for you, as opposed to using traditional services?
Let me answer sideways. We have recently decided to use a USDC as a payment rail because we believe stablecoins are actually perfectly suited to bridge the traditional fiat and the Web3 decentralized finance spaces. And actually, in a couple of hours, we'll have USDC out, so that's news. But we can convert dollars in on a one-to-one basis, so no fees, and we'll do the dollar to USDC conversion also with 0 fees, and that will be managed by a blockchain system. So,
Thanks.
cheers.
All right, perfect.